This is News You Can Use.
Who is Fannie Mae and who is Freddie Mac? And more importantly, what exactly do they do? Well, Fannie Mae is the Federal National Mortgage Association, and Freddie Mac is the Federal Home Loan Mortgage Corporation. And what they do is they both provide liquidity to the U.S. housing finance industry by buying loans from lenders like Supreme. And then they guarantee the repayment of those loans to the investors who buy the loans in what we call mortgage-backed securities. All right, now we know who Fannie Mae and Freddie Mac are and a little bit about what they do. Let's talk additionally about what they do. They create the underwriting criteria for the entire industry for all of the lenders to determine what loans can be approved. So they give us guidelines on income, on assets, on credit, and on properties that are eligible to buy. They also set the loan limits for our industry. 2021, the Federal Housing Finance Administration, which oversees Fannie Mae and Freddie Mac on behalf of the federal government, well, they set the baseline conforming loan limit for a home unit at $548,250. That's the conventional ceiling for 2021 on how much we can lend to any single customer on a single family detached transaction. Those limits will be going up to $625 at the end of November. That represents an increase of $76,750 or nearly 14% increased loan limits. This increase recognizes the incredible rise in property values that we've all experienced in the housing market over the last 2 years. In 2021, home prices surged 24% year over year to a median price of $386,888. During the same time period, the number of homes sold increased almost 21%, and the number of homes for sale, well, they tumbled 39%. So we've got a supply and demand imbalance. That's not news you can use, but the loan limits are. Increased prices and increased demand for housing combined with low inventory, it's created a decidedly, seller's market. As a real estate agent, you need every tool available to help your buy-side clients secure the home of their dreams during these current conditions. And Supreme, start with Supreme, we're here to help. Effective today, with loans locked on or after today, October 4th, 2021, Supreme Lending is offering the 2022 loan limits of up to $625,000 for all states and counties. We're getting an early start, giving you another tool for some of your customers. What does that mean for you and your clients? Put simply, your clients can now finance more expensive properties without utilizing jumbo loan products, which often come with greater underwriting requirements for your customer. With Supreme Lending offering these higher loan limits now ahead of the official implementation from Fannie and Freddie, well, it'll help you and your clients secure the home of their dreams as long as you do it before the end of the year, right? Well, you could do it at the end of the year, but you could do it now. Why wait? No matter what, your customer's first stop should always be a pre-approval from Supreme Lending so they know exactly how much they can afford. To that end, we've worked on a new tool with the market conditions in mind for all of your customers with some simple but really important information to share with not only your customer, but with the sellers. Our new Supreme pre-approval letter now lists some important up-to-date stats for your customers and for the sellers that you're presenting a contract to give them peace of mind. Additionally, it will also help you turn their offer, your buyer's offer, into the winning offer. You see, sellers today are choosing the lender just as much as the buyer because they're giving the lender associated with the offer more weight than ever when calculating exactly which offer they will accept. So our new pre-approval letters, we change them. They no longer just say how much your client can afford, but it also clearly communicates some other important data that both your buyer and your sellers need to know so they can make the decision about accepting your offer. Customer satisfaction, okay? Banks, they're at 42%. Non-banks at 52%. Start with Supreme, we're at 98%. Why does that matter? Because customer service is ours, yours and my competitive advantage, and part of our value differentiating, leading to loyal and repeat business for both of us. That's news you can use. Close on time, fund on time. Will the money be there at the closing date table on the time of the closing date? This is perhaps the most important question that your buyer and your seller, this is the question they need to know. So every lender basically, well, do they know what their track record is for making sure that the money's going to be there on time? Ask them. I guarantee you in most cases they don't know and they can't prove it. We track this statistic relentlessly, and we can happily report that year to date we're maintaining a 99.5% close on time rate. 99.5%. Guarantee you should start with Supreme. You know why? Your buyer and your seller both, in the end, want one thing: to close on time. And finally, speed. You might need to write a contract with a really fast closing date, but you're always going to write one with a specific closing date. The question is, can the lender that's involved, can they keep up with the speed that's necessary to make the contract a winning proposal to a seller? Keep in mind, the industry as a whole, my industry, has been focusing on refinances the past 2 years. About 60% of all the loans in America have been refinances. And refinances, why have they been doing it? They're easy. There's no deadlines to hit, no agents involved, no appraisal contingencies, no moving trucks, no closing dates. You get there whenever you get there. Supreme Lending, start with Supreme. We've remained laser focused on buy side, your transactions with your buyers. 80% of our loans are home purchases this year. 80% versus the industry that's only doing about 35%. While the industry's taking its time with an average of 51 days to close a transaction, we shed a day off of our average close times, which were records in the industry to start with. We're now down to, on average, 22 days. And when you and/or your clients need it, we can go really, really fast. If that's what the seller wants and needs for you and your buyer to get under contract, we can close in as little as 8 days. And many of our strategic partners out in the audience today, they take advantage of the speed to help their clients get under contract, especially when they're competing against cash offers. Conventional loan limits rising, a seller's market, customer satisfaction, close on time, speed. It's more important than ever for you and your clients that you start with Supreme. I'm Pat Flood, and this is News You Can Use.